Join us now to talk markets and read the charts is Katie Stockton, Fairlead Strategies founder and managing partner. She's also a CNBC contributor. We look back at the previous year and try to look ahead. That's just natural because of where we are on the calendar. People are talking about Apple losing some momentum. That could be important for the overall market because it's such a leader. Is this something more than just a backing and filling period for Apple?
Well, I think we have to contextualize it, right? We had such a huge move from the major indices ahead of this pullback. It was more pronounced for Apple than for most of the mega caps and also for the major indices. And yet, to me, we now have a short-term oversold reading for Apple. It's still within the context of a long-term uptrend. There's good support right around 179, 180. So it's a bit of a proving ground for it. I'm not ready to add exposure yet, but just with a little stabilization, I would say I'd feel actually confident adding into weakness. And that's often hard to do. People talk about, well, buy the dip. Well, here's the dip, and it has people a bit shaken.
I hesitate to ask you about, well, for a technician, you do talk about election years, so you don't need to talk about it in a fundamental way. You can just talk about it statistically, what happens during election years, but also what about sentiment? I mean, no one expected the type of gains that we saw, I think, in 2023. Could it repeat itself in 2024, and is that likely in an election year?
So the thing about Q4 was that we saw this major breakout, and it was a breakout that was shared not just by the large cap indices, but also the small cap indices. So we saw big breath on this big move, resistance levels cleared, and that does set a very positive tone for the year, for the whole year, in fact, because we have what technicians call these big cup and handle formations. If you look at a chart long-term of Microsoft as one example, Microsoft being a big heavyweight, just like Apple, of course, we have this major breakout to new all-time highs, and that clears the chart of resistance. It shows a sentiment shift and also a willingness now to go farther down the market cap spectrum. So I think that that's going to be key for the market, and also the spreading out in terms of sector participation. We had technology, communications, all the mega cap heavy sectors did best, even with the Q4 rally. But now we're seeing financials as one example kick in, and maybe even healthcare. I
mean, it was a hated rally, and it gave the bears hope that they were going to end up being right about October lows. Now we got to specify which October we're talking about, but. Right. For 2 straight years, people were married to the October lows and retesting those. And for most of 2023, people were either not in love with the rally or thought there was going to be a comeuppance or it wasn't going to continue. Was that all taken care of in the fourth quarter? It was solidly.
I would say so. And even earlier in the year when we had a breakout back in May, that to me is where we emerged from that bear cycle of 2022. And we had to sort of concede to the fact that even though leadership was narrow, we had this bull market cycle in place. We can arrive at, for the S&P 500, a price objective of about 6,100 if we see new highs. And we are looking for new highs after this consolidation. And we're really not reading too much into the consolidation because it does follow such a strong relief rally. And with that, of course, you get the overbought reading in market sentiment, in market breadth.
We did have a guy, it was just a couple weeks ago, Becky, 3,500. Still talking about 3,500 on the S&P. Did you just say 6,100?
6,100. And that wouldn't necessarily be relevant for this year, but it's something to sort of remind you to keep a bullish bias when the markets are trending higher. The long-term momentum shift is really very meaningful, what we saw last year. It took kind of a long time to unfold based on the nature of the 2022 bear market cycle. But now we have these long-term momentum gauges pointing higher, and overbought conditions so far are being absorbed very well, and that's characteristic of a bull market. All
right, next time you're on, we can talk interest rates. Is there a way? How do you look at inflation? Do you do charts for inflation?
We don't often chart the macro data in that way. It's a little slow moving for us.
Bonds
for my
to chart inflation. Yeah, you could use
but certainly
the 10-year.
Yields. I mean, we think yields will be in a corrective mode, meaning sideways to lower for much of this year.
The yields, not the
yields.
bond.